2022 is quickly drawing to a close. It is December of 2022, just before Christmas. And every year I have objectives to learn something during the course of the year. And of course, on this YouTube platform, we have an educational platform with Brandon and myself. This year, we have posted 127 videos so far. This is video number 128. We have had about 3.8 million views on the channel, which equates to about 360,000 hours of you folks watching us and going through the material that we've put on the channel here. What I've done over the past few days is I've gone through and I've rewatched all of the videos that we posted this year, and I had a very specific objective. I wanted to look through the variety of topics that we do sort of all under the financial field, the financial umbrella, and narrow it down to the 5 most important lessons that I feel we've shared or that we've tried to teach during the course of the year. What I've done for this video is I'm narrowing that down to what I feel are the 5 most important lessons of all the material that we put out there. What are the most important takeaways during the course of 2022? I'm going to review some of the sample clips from the videos that we posted this year, and then I want to comment on each of the little segments here. I'm going to start with sort of the overall topic of the YouTube community in general and due diligence. Let's watch a few clips here, and then I'll be back to comment on them. Let me start with the first and the most important thing that I feel when you visit a channel like this, and that is that when you visit our channel or any other financially related channel for that matter, it has to be about you.
I will just remind you that just because I'm talking about this video, this is strictly just my opinion, right? This is just one person's stance on it. I could very well be wrong. I'm basically sharing with you guys why it's not a stock that I like. For me, that doesn't mean that if you own Foot Locker, you're not gonna do well, or that you should be selling it, like nothing like that. That's the whole point of this video, is to spur some discussion.
I would look for things like if there is a ton of hype, and I think we've all seen over the last year roughly, money made and money lost. If there's a lot of hype and too much over the top promotion of something, then that's something that you might want to, well, it's a red flag.
I'm sharing with you guys what I personally do, right? For me, for Brandon, for my personal strategy, why I do what I do. I'm in no way trying to entice you or sway you into one way is better, this or that. I'm just gonna share with you the justification as to why this is a strategy that works for me.
But that certainly isn't a recommendation just to go out and blindly buy that stock or buy that ETF. And there's a lot of logic behind that because we don't know who you are. And without knowing that information, nobody can give you blanket advice. When you look at what you're seeing on the various YouTube channels today, I'm hoping that each and every one of you will do your critical thinking, I guess I would say, and assess, is this person speaking into the camera like I am right now, do they have my best interests at heart? Are they legitimately trying to educate me, to entertain me, in some cases to help me, or are they doing this for their own reasons? So what are the key takeaways that I have from those clips I want to share with you here? Number one, we have to be reminded that the YouTube community is part entertainment and part education. I believe that in this past year, there's sort of two parties that are a little bit at fault here. Our peers in this community on this platform, I believe, failed in providing information that wasn't necessarily accurate or certainly wasn't in the viewer's best interest. At the same time, what we learned is that the viewers have to take that responsibility to distinguish between this entertainment and information and just make sure that you're acting on the good information and not just sort of following blindly. I encourage everybody on the YouTube platform to just soak in the information. There's so much valuable information out there. It's good to do that. Remember that on our channel here, neither Brandon nor I are going to be exactly like you. We have different situations. Everybody's a little bit different. Bottom line, we don't know you. And when we speak on the channel, when we talk about investment strategies, when we talk about various companies, we're speaking generally. And you always have to, whether it's our channel or whether it is another party that you're watching out there, another channel you're watching, probably one of the most important things is that you have to think critically. You can never put too much emphasis on taking the information in, but then thinking through and seeing if it makes sense and ultimately if it acts in your best interest. Now, the second lesson is that we don't know. Now, I would love to believe that I have all the answers and I know everything, but of course I don't. Let's watch a few clips here so I can sort of show you about how our interpretation of what we do or do not know during our videos in 2022.
I think the takeaway for this video, guys, is that I wish I had an answer for you in terms of what is going to play out over the next few weeks or the next month as an investor. But if you guys have been following this channel long enough, you guys know that that's not what you should expect of me. And that's not what I think any investor out there should predict. I think it's foolish to think that you will know what will happen in the stock market over a short period of time like that. What we can do as investors, however, is be able to kind of piece together what's happening. Take a look at the macro environment. Take a look at what's happening in these various markets or what's happening with the Fed and start piecing things together to at least take somewhat of a stance.
I always go back to this. We have to accept our own limitations. I wish we had that proverbial crystal ball, but we don't. There's no point in wanting something to be different. There's no point in deluding ourselves to the point where we just feel like it has to be over and things are going to go up from here. We have to accept that we don't know the answer to that question. We have to accept our own limitations. That's probably the key lesson to take away from this part of the video I'm doing today. In the investing world, there are so many variables out there, and it's literally impossible for any one person to really get a full grasp of everything out there that can affect your decision. Nobody has that crystal ball, and I mean nobody. It is dangerous when you cross over from being a confident investor to being overconfident and sort of discounting what other people have to say. Just understand that there are limitations to our knowledge out there. Now, that also takes me, sort of segues into the third lesson today, which is mistakes. And we've certainly made our share of mistakes over the years, and even here on our YouTube channel. Let's look at some clips and I'll give you some thoughts, or you'll hear some thoughts on our own imperfections. There should be no expectation of perfection. And, we're no different on our channel. If you look back over the videos that we've spoken about and we have our stock battles, we have different ways that we share our thoughts on videos. Some have been home runs. Some have been strikeouts.
Now, lesson number 4, I think, is a perfect one to build off of that, because time will tell whether this is the case or not. But lesson number 4 is understanding that you are going to make mistakes. Everyone is going to make mistakes. Accept that fact and learn from them. And I have made so many mistakes over the years as an investor. I've gone out and bought into hype. I've bought IPOs that I probably should not have bought. I've sold winning stocks too early.
Even now, I remember thinking, there's something wrong here. Like, there's something risky here. Should I put a stop loss order in, or should I just trim my position? And I guess, as you probably figured out, because in the day, everything was going up, everything was going to continue to go up, and I did get caught up in that. And so no, I didn't sell any of the position, and I wrote it all the way back down. Well, when I think of all the mistakes I've made over the years as an investor, I just can hardly grasp the wealth I could have created if I would have made all those calls correctly. We are going to continue to make mistakes. You're going to continue to make mistakes. Accept in this lesson that making mistakes, erring, is all part of the investing journey. The key, though, is that you capitalize on these mistakes. You don't waste the opportunity to learn from them. And a story I told in one of those clips there is kind of like today, where I had an investment that did quite well, and I wrote it back down to the bottom. And of course, over the last year or so, we've seen that happen so much. So there's a perfect example of this just not acting properly, or being a little bit greedy, perhaps, is one of the very many mistakes that we make. I recognize here on this YouTube channel that Brandon and I have a public forum, and we say a lot of things, and they're all recorded. And I guess the lesson is, when we screw up on this channel, don't be shocked by it, because it is going to happen. Take it inside and really reflect on the learning experiences from there, the learning opportunities. And as a bit of a bonus lesson, I also want to say, be very wary of those who never make mistakes. You will hear from people, you'll see other YouTubers who never have made that mistake in their life, and that's something that you have to be very wary of as well. Now, that takes me to the fourth lesson, and this is sort of it's a very critical lesson, and it's a combination of risk and portfolio management. So let's look at some clips, and then I'll come back and chat a little bit more about this lesson. The opportunity that is staring us right in the face right now is this opportunity to go back and revisit investing fundamentals, revisiting what it means to build a proper portfolio in the first place.
While your higher beta stocks will be the ones that have capitalized the most, it's probably not a bad idea to trim from the winners, which I know is a controversial topic.
If you didn't anticipate what we're going through now, you're not properly prepared as an investor. You have to have that battle plan going in. Otherwise, you're setting yourself up, for failure.
It may have been a good idea to have been taking profits along the way and then reallocating those into safer shares when the stock market's doing really well. And again, for the past little while, it has done very well. And your small cap stocks, your companies that aren't making money, your Pelotons, whatever the case is, they can be doing very, very well. And nobody listens when you should say, maybe be careful with them or take profits along the way, or just maybe limit that to a certain percentage of your portfolio. Nobody listens to that. But then when they do come crashing down 40, 50, 60%, that's when investors do start to kind of click and be like, oh, maybe I shouldn't be in these companies to begin with.
Why did I decide I would make this video and go over this data? What is the lesson, or why, what's the purpose of me even putting this together? I have always argued, and in a time like this, I will argue now, that having a balanced portfolio matters. If you screw up in this field that we're in here, if you blow up your inheritance, if you blow up your investments, your savings plan, etc., then this has lifelong, lasting, and critical implications. There are a number of very important lessons all nestled into this one lesson here. And as I said earlier, a lot of people got hurt in 2022, and it didn't have to happen. The key here, and I listened to Brandon saying things like, take some profits along the way, or rebalance, and those types of basic concepts when it comes to managing money. Understand the risks that come along with investing in the equity markets in particular. And I'm not saying unacceptable risks, but there are risks that come along with this. A key is that you have a plan when you're, getting out there and starting, whether you're a raw beginner or whether you've been investing for a long time. Very important that you have a plan and follow it, right? And we're going to talk a little bit more about that in a second here in the next lesson. But a lot of people will kind of laugh or scoff at the concept of having a balanced portfolio. And a balance doesn't have to mean a 50-50 or the classic 60-40 portfolio. It can mean a lot of different things. It just means that you've sort of done your homework and you understand what works, and then you keep that portfolio in balance. Don't think for a moment that you know better than everybody else, because none of us do. It's all this collective wisdom out there that we all come back to managing the portfolios, and that's one of the keys to having a successful lifetime as an investor. Now I want to move on to the last lesson, and I'm not going to preface what the lesson is. Let's watch just a few clips here, and while we're going through, see if you can sort of pick up on what the lesson is. So I'll be right back.
With that, if you're an investor that says, well, I understand the risks, I understand the ups and downs, I'm not going to care what happens when the market does take a turn, well then, hey, 100% equities can work. I'm just saying that for new investors, for people that maybe haven't lived through those periods, you'll really come to learn whether that is appropriate for you or not when the time does come. And when the time does come, it's often a little bit late to make those adjustments because you're already down in the hole, right? And then all the emotions flare up, and then it can be a little more, tricky.
Being humble is a big part of being a successful investor. And I'm sure there are a lot of investors who are kind of learning maybe a bit of a harsh lesson right now.
I think a much better way of comparing yourself to others, as hard as that is to do, what you can do is compare yourself against yourself. Look at yourself and say, what am I currently doing in the stock market? Am I beating a benchmark that I set for myself? Like if you want to compare yourself against the S&P, the TSX, whatever you decide, that index is doing its thing in and of itself. It's don't compare yourself to others. And I used to do this a lot, especially when I was just kind of getting started in the investment world when I was much younger. I don't do it as much now, but still it's quite natural to kind of see what's happening around you and kind of evaluate what your peers are doing, what your neighbors are doing, what your coworkers are doing, or what you see here on YouTube. It's very, very common to say, oh, that guy made this much percent, or she's, doing very well in this stock. And what that can do is bring you unnecessary stress. It can make you a lot less happy with what you're doing. And what I think is actually most dangerous is that when you see other people doing things that are doing better than you, you may actually go beyond your parameters as an investor to kind of take part in that. The only person's situation that you truly do know is your own. You know your own cash flow situation, you know your own net worth situation, you know what you have to invest and what your, limits are and what your, yeah, you kind of understand your own situation.
I hope it's clear by watching that this last lesson is about you. And basically, I'm sort of calling this lesson, you look after you. Don't worry about what other people are doing. And it's maybe easier said than done. But as Brandon said in those clips a few times, don't compare yourself to anyone else. Have your strategy, compare yourself to yourself, but really only you know what your dreams are. At the end of the day, you need to set out your plan. You need to lay out your strategy. And that's where you need to maintain your focus. Stay on your own path. And as Brandon alluded to in that video as well, know your limitations. Okay, some people have more time, some people have more money, some people have more experience. Within the boundaries that you have, that you're able to work within, make sure that you stay within those. Focus on learning about yourself. And I don't know that I can give you any better suggestion than that, because at the end of the day, you have to do what's right for you, regardless of what anybody else out there is doing. For all of you who have tuned in and watched us over the past year, now 128 videos, thank you from the bottom of our hearts. We so appreciate the community and the support that we get from all of you. All the best for all of you in 2023. And as always, I'll see you in the next video.